since you're one of the foremost medical office experts, what are the key differences between a medical office property and just a typical office property?
Well, a medical office property, so in off like general office, I mean, you typically have a general office setup. You have a receptionist, typically a bullpen, and maybe exterior offices and a break room. And that's typically can get, I think, 80% of the users have that same setup with a little bit of, maybe differences. Maybe they have more than one conference room or different size conference rooms or, different size break rooms, that sort of thing. But for the most part, that's the setup of a general office user. And that can be applied for an attorney, it can be applied for an insurance company, it can be applied for a logistics company, with a few tweaks. In medical office, you can have five tenants and five completely different build outs. You can have a dermatologist, you can have an orthopedic, you can have a cardiologist, you can have a family practice and imaging or lab. They all have a different setup. And typically, and sometimes even within different companies, like they'll have different standard setups. So, if you're working with a national firm, they typically say, okay, this is our footprint. How can you make this footprint work in your building? Otherwise, each of these tenants requires a different build out. What's good with that is that, I would say in general office, you're sometimes in new buildings, you'll get the long-term leases, but typically I think, 3 to 5 is kind of the max in medical office, for having all of these highly specialized build outs that a landlord typically has to fund part of, they in turn get long-term leases. So standard leases, even in second generation buildings, can be more towards the 7 and 10 year time frame, which gives a lot more stability in the asset class. So people in medical office, so it's not as, right now I would say the top um, sexiest commercial real estate food groups, I think, are industrial for the last mile stuff that is going on, and then multifamily continues to be incredibly attractive. But in industrial with the last mile stuff, I think at some point that will saturate
Yeah.
because there's only so many warehouses you can have. Um, and then, with multifamily, those, so I don't know how to underwrite multifamily a little bit, but not too much. But um,
It's not my
you know,
specialty either. So,
right. I mean, you would think that you have to underwrite like these basically year leases, maybe sometimes 6 months, year leases, max, I think 2 years. I mean, I don't know that anyone leases something and says, yeah, I'm going to be here 5 years because I don't know that they know what their life is going to be like. Um, so there's different people go, but again, I think that they do, they're more, they lease them up and then they sell them for the most part. I don't, and in medical office, the investors I think are more long term. So it doesn't get the super highs and lows that other asset classes do, but it's really steady. So like right now, when we're looking at a recession or turbulent economic climate, uh, healthcare is a great investment because an investor can say, okay, I'm going to purchase this now. I know for the next 10 years, I can bank that I'm going to get this cash flow because it's mission critical and demand driven. These tenants have to be in there. They have to operate, in there. You can't go and get a medical procedure well, you shouldn't have it in your home. I mean, um,
so I find that particularly interesting as someone who works with a lot of sometimes less predictable asset classes. I was wondering if you could touch on kind of that predictability of the medical office investment.
absolutely. So healthcare properties, they're mission purpose built, mission driven, mission critical, purpose driven, and there's a reason for the tenants to be there. The tenants need to, one, be there in order to generate revenue for themselves, or if it's a hospital group, the hospital has them there for a strategic purpose to see patients in that market. And so there's a reason for them to be there. They have to be there. Just practicality, you don't go and get procedures in your home. And I think physicians, it's more efficient for them to have patients come see them than try to go to all these different places to see their patients. So when an investor is looking at a healthcare property, they are looking at it for the long-term stability. So it's not going to have the maybe a, the super ups and downs of some of the other asset classes, but they can say, okay, there's 10 years of lease term, or the WALT might be 8.5 years. And I know that I'm going to keep this, I'm going to have 5 years of good strong, predictable cash flow, because the tenants are stable, they're financially strong, and after that I'll probably renew a couple and then I can sell it. So that's their thought process when they're looking at a healthcare property, and it's a property to add to their portfolio that is stable and predictable. And as we're going into, I think I've said this before, but as we're going into this uncertain economic climate, having healthcare properties in your portfolio guarantees a return on, a pretty predictable recession resilient return.
Yeah, I mean, we've certainly seen that within our own portfolio. Some of our hospital and medical assets have been very resilient through COVID-19. Have you seen that as well in some of the investment properties that you've worked with?
Absolutely. So the landlords in the space, they report that they receive, over like mid 90% of their leases. A lot of the tenants qualified for the PPP loan. A lot of landlords initially put together this whole PPP help program, information, links, and everything for their tenants to go and get access to. So, a lot of them, even though they might have been closed for a few months, depending on the state that you were in, they returned to pretty healthy and quickly throughout the pandemic, because people still needed to get healthcare. If you have cancer, you still have to get chemotherapy. If you um, have a chronic condition, and if you just want to stay up on your healthcare and not forego seeing a physician for a long period of time, you want to keep up. I mean, pediatricians, they still have to see babies throughout, as they grow, and babies grow pretty fast in the first 2 years of their life. So and a parent isn't going to not see their pediatrician because of a pandemic.
A change of pace from the get rich quick gurus. Subscribe to the Real Finds podcast for in-depth conversations with voices shaping the real estate world.